So it's always wonderful to see you, to do the check-in, and to see how the year's progressing, and it's another phenomenal year. I always check in with Jane before I talk any kind of financial progress so that she can edit me down to one or two little bullet points. And the one thing that we should all be incredibly excited about is post a turnaround. If everything comes through, which I'm sure it will, for this quarter, that will be our, Jane, correct me if I'm wrong, 16th consecutive quarter of positive comps. 16 quarters, guys. Really exciting. Which really means that I think we are starting to get the hang of things, right? We're starting to get on track. And it's very, very exciting. And when you have a day like we had yesterday, where we're just now building the positive comp momentum on top of positive comps, and we had almost an 8 comp yesterday, as Jeff was saying, it's really, really exciting. So in the short time we always have together for the talking and you listening, I always like to take us back up at 50,000 feet and really look at the landscape, not dissimilar to what we like to do when we go on Google Earth, right? Start up here and just sort of work our way down, and how does that impact everything daily in our stores. And I always like to wrap everything around the package of optimism, right? Because we are a very optimistic group. We've been optimistic for years and years, and as you know, optimism pays off. And one of the things that I found particularly interesting leading up to this meeting is that one of the folks that I've actually been lucky enough to meet over the years down in Santa Clara, who is maybe one of the greatest optimists on the planet, is Elon Musk. And many of you know Elon or have heard the name because he, aside from being sort of the co-inventor of PayPal and a whole host of other technologies, he's most well known today for a funky little car company that he conceptualized years ago called Tesla. And if you go back, you know, now he's the brilliant mind that is revolutionizing the car industry. But if you just go back a handful of years and read about what everybody was writing about Elon, you would think that the guy is just a complete, total nut job. And there's no way that a high-end electric car company is going to work, and there's no way it's going to compete with Detroit, and it's no way it's going to compete with Volt and the hybrids and Toyota. And he's actually closing in now. If you look at their the reason he's been in the news is because he continues to exceed everybody's expectations through his technology platform and through his fixed cost operating structure, what he's developed. And they are actually on the verge of breaking even at Tesla, which is really quite extraordinary. And people are starting to really think of him as becoming a serious auto industry player. And years ago, when he talked about being able to produce 500,000 to 700,000 and sell 500,000 to 700,000 cars a year, people just looked at him like he was from another planet. And speaking of another planet, he's also the fellow that's conceptualized the missions to Mars, and he's building a rocket. He has SpaceX, which is his company. And now the latest is this hyper-transportation transporting system that you may have started to see in the news, which is really quite fascinating. He has this whole theoretical process that would take you from LA to San Francisco in about a half an hour. Now, as it transports you today, it sort of rips your head from your body because of the speed, but he says that's a minor technicality that he's going to figure out. So when you think about optimism and optimistic people, and you look at over a long horizon, he's really not just an inspirational person, but he's illustrative of just the amazing things that are happening everywhere on the planet, why there is, despite the negative soundbites, so much reason for optimism. There are so many smart people around us today that have these incredibly breakthrough, innovative ideas that are just coming to fruition one after another, and it's just a phenomenal time to be innovating and positioning ourselves for the future. And years ago, when we said that we could create a retail business model that would be highly differentiated, that would be able to make us much less vulnerable to the Amazons of the world and e-commerce, that would take us out of central manufacturing in China in a big centralized way and move us to a lot of other countries that were emerging and that would have the ability to manufacture for us. if you remember Wall Street and everybody, we put all that information out there and told everybody how we're going to reposition the business. And our stock, which had gone from 48 to 12, promptly went from 12 to 58 cents, if you remember back in those years. And go back and look at what people were writing about Tesla many years ago. Not that I would put us in that category, but in terms of the way we've all worked on our business model over the last 8 years and reinvented and redeveloped it to position ourselves to where we are at today, to be able to layer on positive comps on top of positive comps in 16 consecutive quarters. Not a lot of retailers that are out there today that are operating less than 300 stores that are doing the type of volume that we're doing in the marketplace today with these type of sustainable comps. So it's a lot to be proud of, and we're just getting started. Now that we have the balance sheet and the partnerships with our parent, our ability to expand and grow is just getting stronger and stronger every day. And it's thrilling to be able to come here and talk with everybody for a few minutes and see new district managers, to see the growth programs, to see training for leadership in the future. It really bodes well for us. It's a very, very exciting time, and how different what a few short years make. So it's really a great time to be launching our district manager meeting and getting ready for the most important months of the year that are in front of us. I wanted to take a little bit of time, as I always do, and just talk about the macro environment around us, what we're seeing, how to be thinking about it. And as we all know, we've lived through a very significant downturn in the housing business, in the home furnishing, and the home decor business. And so I'm going to take a few minutes and talk about that this morning. Then I'm going to talk about what we see going on the food and wine business, because it's really transforming right around us every day. It's changing as dramatically as the home side changed over the years when specialty retailers were coming in and starting to really take on all of the profitable areas that department stores had and created specialty retailing on the home side. So it's really a dynamic environment today and extraordinarily competitive, and I think it's worth taking a few minutes and talking about that, what we see going on there. But on the home side of the business, today I think the great news is that we've lived through such a significant housing downturn, and housing is now coming back around. You see it in many of your markets. Inventory has been really taken up. You know, there's been a lot written that some of the inventory has been taken by investment groups and whatnot to convert into rentals. But that being said, still housing starts, the young population getting back to a place where they can start affording housing, housing costs, housing prices stabilizing. The housing market today is better than it's been in at least 48 months, which bodes extraordinarily well for us. Because if you look what happened in 08 and 09, as a result of the crash, if you remember, we watched a lot of competitors just go away. A lot of competitors were edited out of the marketplace. On one hand, you had the Levitz Furnitures going away. You had all of the patio and outdoor providers in many of our markets going away. Linens and Things, which Bed Bath was terribly unhappy about, went away. Bombay Company, I mean, think about it. It's just, you know, here, Mervyn's, Gottschalk's. It was sort of an endless array of people going away. And the result of that is now that the housing market is coming back, the folks that have survived through that have an unparalleled opportunity to really pick up on all this pent-up demand. It's going to be quite extraordinary for us over the next 3 to 4 years. But with that, it's the classic law of the jungle. With that also comes the challenges of the folks that have survived, as we have seen over the last several years, and as you see day in and day out, are much, much better operators, right? Pier 1 has really gotten their act together and has really improved their stores and has improved their merchandising product. Home Goods has really gotten their act together, has really improved their merchandising offerings and their price points, and have gotten deeper into home decor in a meaningful way. A lot of folks have added categories that they never had before, the wall decor and the candle offering and the tabletop. So it's the classic law of the jungle. The folks that have survived have gotten much stronger, and competitively they have really positioned themselves to be able to try and garner market share as this market solidifies. The other good news is there's what now? 4 years of pent-up demand. So both on the remodeling side, on the new housing start side, it's really, I think, going to be extraordinary for folks that can gain market share, what's going to happen over the next 3 or 4 years. And you see this in your markets. Urban Home, who we really didn't allow to get in Southern Cal, Kara, and John, I mean, they really didn't get much traction getting Open Home. We beat them up pretty good, but they are, I mean, their stores look great, their offerings look great, and they're a serious competitor. Are they doing any more expansion in that market as of late? Not recently. Yeah, I think we've slowed them down a bit. I think they were really expecting better things in West LA. But a great example, though, of somebody who really wasn't a competitor and has really upped their game. And then, of course, you have the folks like Crate and Barrel who have really become so highly promotional. I actually think they, while still a very, very challenging competitor, they have actually gone a little bit backwards in terms of their merchandising offerings and their competitive nature, particularly as it relates to tabletop and the fashion side of home decor. But they are hyper promotional now. But the bottom line is everybody who has survived is stronger and better, and we have to really stay focused on that. We have to keep upping our game every day, every week. Cannot take it, we just can't take it for granted. So it's very, very exciting times in the world of home and home decor, but it's also going to be fraught with the next iteration of competitive challenges. And of course, later on this morning, we're going to talk much more about the internet and how that plays into all this, because e-commerce, as we all know, is just growing light years. And for whatever reason, whether it's Amazon or anybody else, the internet retailers have gotten a complete hall pass with one minor metric as it relates to venture capitalists and Wall Street, and that is they don't really have to make any money, which makes it really dangerous. I mean, I still don't think Amazon, I mean, gee, I don't think Amazon makes net income, does it? I don't think they actually, can you imagine, what do you think we would look like if our metrics look similar to Amazon's, right? But what makes it so dangerous is they have the ability to really continually invest in the market share growth. As Jason likes to say every time he comes in the office, he goes, they're just taking the oxygen out of the room, they're just taking the oxygen out of the room. But it's true, right? They got this complete hall pass like so many of the internet models. Very few of the internet models that aren't related to infrastructure are actually making money or even generating self-sustaining cash flow. It's really quite fascinating to watch, but that makes it that much more vulnerable in terms of taking market share out. So on the home side, on the macroeconomic side, in the times we've been talking together over the years, it really hasn't been better than it is now. It's very, it's just very exciting what's going on. The other really good news is, this whole sort of morphing of the credit world and the profile of people that are buying homes, it's our perfect demographic. It's highly educated families that are on a budget. They now have to come up with 10, 20% down. They can't do it with no money down. They can't do it with 5%. They have to have good professional careers. They have to really be credit worthy, which is a very healthy long-term. So things are essentially moving back to normal. And sort of the hyper bubble years of housing, I don't know if they're ultimately behind us, because a lot of these bubbles historically tend to resurface at some point in time, but right now it's a very stable, very promising proposition for all of us. So we're going to play right into this over the next several days. I think you're going to find, from a merchandising standpoint, from a strategy standpoint, from an execution standpoint, we are really well positioned to benefit over what's happening in the consumer marketplace today. So a lot of reason for optimism. Let's take a few minutes and talk about food. And how it's changing. We just, with our last management offsite that we do every sort of 4 to 6 weeks with the leadership team, just to brainstorm, take stock of where the business is at, and call audibles and redirect. One of the things that Matt brought to the table was just an update on the wine business, and the one metric that just, everybody just looked at each other, is that in the last 36 months, make sure I get this right, Matt, but in the last 36 months, there's 21,000 more doors that sell wine. 21,000. So when I talked to you guys a couple years ago that there's a gas station in Columbia, South Carolina that has cupcake Chardonnay, and you laughed, and I said, that's scary to me. What does that really mean for the wine business? Well, you're starting to see the regulatory climate. You're starting to see everything change in such dramatic ways that everybody is getting into the wine business, which means we're going to have to constantly be in a process of reinvention, constantly be in a process of change, rethinking the model over and over again. And what all of you have done here is incredibly masterful, because all roads always lead back to Rome, right? They always come back to our 4 strategic pillars. And the fact that we created these 4 strategic selling pillars, which are, Ed, what are our 4 strategic? Tell the group.
Entertaining, home, gifts, and season.
All right. There you go. See? After 5, I knew you would get it right. That's why I called on you. I reminded him when we were in the hallway. I said, okay, now I'm going to ask you, what are the 4? Now he knows. You guys know what our selling pillars are. We live and breathe them every day. So, but the reality is the fact that we have these 4 strategic selling pillars make us less vulnerable than many of our competitors, because when one area of our capabilities become under siege and we have to retool and we have to reinvent for the future, we're able, just like the pistons on engine, we're able to morph into some of the other pillars and strengthen them and offset. And we've been able to do this so successfully, and my hat's off to all of you, because where we've been under siege, when you look at the overall comp performance, I mean, you think about 21,000 new doors in 36 months in just the wine business, and the fact that we're running strong positive comps, it's because we have really been able, in a very entrepreneurial way, to bob and weave and respond to this competitive marketplace that's taking place. The other thing everybody's starting to see firsthand, it really started to accelerate, I guess, about 4 years ago, and now it's the new norm. Everybody who was struggling in retail in 08 and 09 recognized very quickly that the road to footsteps was wrapped around lower priced consumables and building a market basket, and how do you get more of these traffic driving activities going on in your retail environment day in and day out. And so everybody moved into food, everybody moved into wine, and most importantly, the way they positioned themselves and moved in is they looked at the competitive landscape, and they looked at the entrenched competitors, the Krogers of the world, and the Safeways of the world, and the Publix of the world, and all the folks that, the H-E-Bs in Texas, and they said, what are the areas that we can really play in that give us the ability to have a little bit better margins, to have a little bit better footsteps? And so everybody really upped their game. I think in the last 48 months, the company that's actually been the most successful at subtly repositioning themselves has actually been Whole Foods. And they've been doing it sort of quietly as they rolled out their private label programs. 4 years ago, what was the biggest complaint at Whole Foods? What did they call Whole Foods? Right. And they started to reinvent strategically what goes on in their store. They're still obviously not Walmart or Target in grocery, but if you look at their pricing structure and their private label structure and their SKUs today, Whole Foods price points have really come down quite dramatically, because they are trying to become more and more mainstream as they take market share from the Safeways, from the Krogers. And then you have regional players like Harris Teeter. That is the most graphic example of somebody that put a lot of money there in the Southeast primarily. They put a lot of money, I mean, Chris, you watched this firsthand, in their wine departments, in their food departments. They were worried about the onslaught of Trader Joe's, so they created their own HT Traders, which once Trader Joe's came in, they sort of took that away from them. But ultimately, Harris Teeter sold to Kroger. Even though they were sophisticated, they were good operators, they just couldn't hang on to their market share in what has become this huge onslaught of competitive grocery. And so when you look at folks like Safeway, and you look at their numbers, and you look at the Krogers of the world, who, by the way, bought Harris Teeter, you can really see what happened years ago in the department store industry, that margins in an already stressed margin business are starting to become compressed. People are really expecting both price and robust selection. They're expecting organics, they're expecting freshness. So as always, the consumer is expecting a lot more and expects to pay a lot less. And in the throes of all that, we still have the Walmarts who have really upped their game, the Targets who have upped their game, and Costco. I mean, Costco today is a major and serious food player. If you're buying the quality of everything you can get on the food side in a Costco compared to just a handful of years ago, they're a serious food competitor now. So what does that mean for Cost Plus World Market? Once again, every day we get up, we cannot take it for granted that we're just going to get our fair share of the marketplace. We have to continue to be very, very careful as we establish our equilibrium, and we have to be very mindful that our competitive weapon is we don't want to be thought of as a grocer, right? We do not want to be thought of as a grocer. We want to have specialty foods. We've been very careful and very thoughtful about the type of shelf-stable product that we carry in terms of does it fit the entertaining pillar, and we're constantly trying to walk that equilibrium. On one hand, we want people to think of us when they're doing home entertaining. They want to make a dessert, or they want to bake something really interesting, or they want some cool spices. But on the other hand, we don't want to push ourselves into a place where all of a sudden people think us as a mainstream grocery store. And that's a very important tightrope that we have to constantly be mindful of, because the minute we cross over, we're in a world of hurt, because all the grocers that are going to be moving to our centers, we will end up seeing a real onslaught into that side of the business that we've been able to maintain a very, very strong competitive advantage and equilibrium. And equally as important, we want to have that sort of healthy confrontation between our food side and our home side. And I want to be able to walk in our hallways and hear Marilyn telling Matt why we shouldn't have shopping carts in the front of our stores, and Matt telling Marilyn, well, what are you, crazy if we should have more shopping carts and bigger shopping carts in our store? So I don't want those conversations to go away from us ever, but it's finding that equilibrium, because if you push it one way or the other doesn't work, and it's really our formula, and it's our secret weapon in the marketplace. So the headline is things are really progressing nicely. The macros are really in our favor, but every morning we get up, we have to do as we've always done, and we cannot take it for granted that this is going to be this way in a week, a month, a year, because there are still some major potential derailers out there that are completely out of our control, right? We have the macro events, the geopolitical instability that'll be ongoing and with us, and the crazy headlines. And then as we move into the fall, particularly folks like Larry who live with the Washington, D.C. information day in and day out, the next round of the sequester takes hold. There's just a lot of forces still out of our control. There's going to be political dysfunction, which is becoming the norm. It seems like the consumer, though, finally is overcoming that, doesn't it? I mean, the consumer, so much, it's like living here in California with Prop 65. There's so much noise around regulation. There's so many recalls that at some point in time, it sort of just becomes the normal landscape, and it just becomes a little bit invisible. The same thing is happening with all the political dysfunction. Businesses and consumers are, I think, just sort of going on and going about their life and not paying as much attention or getting as nervous. But this next round of sequester, this next round of potential government layoffs, and if you think about it in the context of what happened the first time around, do you remember all the media noise and the political noise about the sky is falling, the world? I mean, half the people in Vienna, Virginia are going to lose their homes, and everybody's going to give well, none of it really came to pass. So I do think there's a little bit in the consumer marketplace today, too, of skepticism around, is it really going to be as bad as they're making it out to be? So while things are good, and it's a really good report at this point in time, I think it's very important for us to understand that it can't all just change on a dime always for us. So we've got to continue to drive these positive comps while we have the opportunity and continue to make really good progress. And then before I wrap up, I've actually put together 2 slides, okay? I got pressured in by the leadership. I got pressured. I have to have a PowerPoint presentation. It's not going to be as interesting as Jeff's. And you're right, everything we did want to know, we learned in kindergarten. Because remember, we used to talk years ago. How many of you remember the game Chutes and Ladders? I mean, it totally brought back the memory to Chutes and Ladders, right? Because that is everything you want to know about life. Just when you think it's all great, you go back to the beginning and lose the whole game. It just totally reminded me of that Chutes and Ladders game, you know? It's all part of that same thing. You're right. Kindergarten, you didn't really have to mess with any of the rest of the education. You're so right. Okay, I have 2 slides I've put together for you. The first, because it's really worth being illustrative, I think, for everybody to see where we're at. We're a national chain now. This is a slide of what are today 266 stores. So we are going to march our way back to the first stake in the ground, which is 300 stores. We have the backbone and expertise of the entire Bed Bath sophistication in terms of the real estate positioning and the real estate sophistication, and it's very exciting, the work that they're doing, and they're starting to really fill the pipeline for us. We've highlighted on this map, if you look to the northeast quadrant, we're really beginning to look at locations now so that New York, New England, more expansion in the Mid-Atlantic, it's all becoming a reality for us now. We're also going to continue to fill in existing markets. You can see by the yellow dots some of the new locations that you've all been part of, and of course the great relocations. Take 2 minutes and talk about our relocation in Denver, Colorado. Is everybody up to speed on what's been going on there, huh? Can you take 2 minutes to talk about it? How's our volume? How are we looking?
10 million. We're doing 10 million this year.
That's it, right? You said that from the beginning.
Double-digit comps on top of the double.
It's so exciting. It's so exciting. It's really great. And the new stores in general are doing extremely well. There are crown jewels. If we want to accelerate, remember how I think about this, if we want to accelerate store openings, we have to always be certain that the stores we're opening are working. I mean, that's what got us into trouble in the first place. We were opening stores that were generating negative comps, that were losing money, and we just put the brakes on everything. And so we have to be very mindful. Every time we open a store, it's an absolute crown jewel. We have to make sure it's working, because we'll do a lot of upfront work to make sure that the performers are rational, that they're achievable, because if they're not, we're not going to open the store to begin with. And we've organized ourselves so we can make really good money when our stores start really heading north of $3 million. So we really have to be mindful of the performance of our new stores so that we can accelerate. And it's very exciting, the opportunities. Most of the big population centers, the eastern part of the United States, we don't have any stores. So the future is really great. And one of the reasons that Bed Bath made the commitment they did to us was because they know we can be a really significant growth engine in the years ahead for them. So the future is extraordinary, but it's only extraordinary if we make it work for us on a day in and day out basis. And then I have a second slide that I just want to take a minute and talk about, and that's Jason and team. We started in our garage with our little e-commerce initiative a few years back. We told Jason, come here, we'll give you $50,000, show us what you can do with it, and we'll give you $75,000. Good thing that Elon Musk wasn't sitting in those conversations, because he starts at $10 billion, right? So he would have said, you can't get from here to there with that kind of capital. But look at what we've been able to do in just a handful of years. Doubled sales. Think of this as our electronic store, our e-commerce engine. We have positive cash flow. If this was a little standalone e-commerce initiative right now down on the peninsula, we'd have a $2 billion market cap. Do you guys realize that? So it's really exciting what's happening, and we are going to double, and then as you can see, for 2014, remember the stake in the ground we put here, like we talk about our 300 stores, was a $100 million e-commerce initiative. Well, we're clearly well on the way, and Jason's going to talk in more detail when he's up in just a little bit. So that gives you a good, solid overview in terms of the lay of the land. I'm going to